Hello everyone, good afternoon. This is Neil with midweek market update here, Simpler Futures, free video. We are on the heels this evening of the Fed announcement, which was very much known and expected for Wednesday of this week. What was not known was whether the 82% probability or likelihood as priced in per the Fed funds futures that the rate adjustment would be 75 basis points or the 18% that had priced in for 1 full point or 100 basis. The answer that we got today was indeed in line with the 82%, and that was at 3/4 of a point. So in catching up from when we were together last on Monday, we were citing the fact that we opened at about 38.90 on the week, and have a weekly pivot up here at 39.70 to 72. Gave you a level in front of that last Thursday's naked point of control at 39.36. And unfortunately, that's the best that the uptick was able to accomplish. That's the high of the week. It was done in the Globex of the Monday night going into the Tuesday session. And since then, we have been unable to trade any higher than that. That's, I say unfortunately, because I was looking to, that was like first line of defense on that Thursday naked point of control, but actually more realistically, I was looking to sell from higher, which was up at the weekly pivot up here at about 39.70. That's not happened. What has happened was the Tuesday night met that 36 level, and it's dumped all the way down to one of our two bearish targets, 39 or 38. I'm sorry, 39. 39 is where it came from. 38.20, which was the high of the 14th of July back here. You got a July 14th high that was a gap. I can't show it on this chart because this is the full session data, and you have to find that on an RTH only chart or exclude the overnight data. In other words, that was the reason for that target at 38.20. It was the high of the 14th, December adjusted, and on an RTH chart you'll see it. The second target that I had for you earlier in the week was that the T2 would come down here and hit 37.90 to maybe 93, something like that. Well, looks like that too has come in today. And so now we need an update because basically everything on the downside that we've been looking for, luckily, with absolutely the downside bias and or focus for this week, unfortunately not trading high enough up here at the 39.70s to get that opportunity to sell from higher. But be it as, that's the case, that this thing is sold down, and as of Wednesday of this week met every objective that I've offered you earlier in the week. So we have to come up with more in the way of a plan. And so here is the Paul Harvey, or the rest of the story, I guess, is what we need to look for. So here's what I want to look for now. I want to look for more, okay, because today's day type was a neutral extreme in that it traded through the top of the initial balance and then through the bottom and then settled on the lows. So that's neutral extreme bearish, which generally implies additional follow-through. And so in the way of additional follow-through, I'd like to look for a test of these three lows right there. That's the 630, 71, and 75. So June 30, July 1st, and July 5th, that string of lows right there. That's going to put you into this first quant L1 level, and it's arguable that it's as low as 37.70, but for the purpose of meshing those lows with this quant, I'm going to call it 37.75. Okay, so 37.75, and then the second target And that is, this is in addition to everything that we already discussed, but I mean, I have no choice, right? Because it's already, as of midweek, met our bearish objectives. So 75, and then right below that, there is year 21's open at 37.50. So 75 and 50, 37, 75 and 50. Now, on an uptick, looking for the place that, that we could look to ideally guard against and sell against and remain short against and short bias against. And if you're not short, you're looking for a place to get short on a bounce. Well, then I want to guard that at bounces up to and no higher than, short of or up to, but no higher than 38.58. Okay, 58 is going to be the spot, 38.58. I don't even know if it can get there that high, but that's the spot to sell a bounce. If we get a bounce of, this would be about 50 points, get a 50-point bounce. It's value area low of this entire profile for all of this bounce area, and we're going to try to look at a 58, either get short or add short for those additional targets that I'm offering you down there as of update, in addition to the bearish targets that we had from earlier in the week that really have already been met. So we kind of have to update the plan, right? So look, this is the initial balance chart. This is what we got today. It traded through the top of the initial balance, and then rejected, trade all the way down through the bottom, and then settled on the lows. Trade through the top and the bottom of the initial balance is called a neutral day type. One side or the other is normal variation. Both sides is neutral. So when it goes neutral but then ends on an extreme like this, that's neutral extreme. That generally calls for follow through. It's like things ran out of time while in the middle of an ongoing, move. And, well, you ran out of time. You told us, take your marbles and go home. But yet we were right in the middle of something. So when it opened back up, the thought is, well, then continue. So that's why we look for a continuation tomorrow in addition to what we got today. So with that and the over-under for upticks allowable to but not beyond, we have additional targets for follow through to the downside and the reasons why. And that's the plan for tomorrow and Friday going into the end of the week. Good trading. Take care. Be with you again at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me